Hi to everybody. Um, I'm doing the presentation for the Len Forex course for the 30th of September 2015. And this is what I'm going to do today, which is basically there is not much this week. Last week was great. This week is a bit more quiet. And I suggest to wait for trending markets, so wait for new highs or new lows first. Okay. So look. So for example, the one we covered last week and the previous week was the Aussie, together with many other ones. Aussie as in the main Aussie, yeah, Aussie versus dollar. So let's just make it really big. There we go. So we said that this was a good opportunity to sell. It worked out quite nicely. Okay, worked out quite nicely there. Fine. But now it is not giving you lows, and it gave a low test followed by another low test today, although the bar hasn't closed yet. But it looks that it's not. It looks like it's gonna stop here, potentially go up a little bit, and then potentially go or reverse. Yeah, but it looks that it stopped there. Okay, so it's kind of like testing it. Okay, so it's not lower than this previous low. So if you're looking to sell, even if this pulls back, don't sell it. Okay, because it'll be ranging. It won't be going in a downtrend. So once, let's say, if it does, once it breaks through this low here and puts a new fresh low, and then pulls back, and then the support becomes resistance, and you get some price action there, then you can carry on looking for selling opportunities. Okay, so this is what's happening on the Aussie versus dollar. So well done for those of you who took this trade, and I know loads of my clients took it, so I'm very happy for it. It was a perfect qualified trade, regardless of the outcome, as I said. Okay, even if it triggers and it bumps out, it was still perfect. It was still according to the rules that we always go through over and over again. So let's just carry on. Next one, Euro Swiss. This is another one that we covered last week and the previous week. I'm just going through the ones that are trending. Okay, just through the ones that are trending, nothing else. So here, Paris, okay, phase one, phase two. Paris too big, but okay, we went through these previous weeks and this as well. Okay, higher highs, higher lows. That's another buying opportunity. That goes into phase one. There gives a high test, which is higher than that. Pulls back. That's another buying opportunity. Okay, it's currently running live as we speak. Next one, USD Canadian. It's breaking through. So the trend is continuing on its way up. So we have phase one, phase two, phase one, phase two, phase one, phase two, phase one, phase two, phase one again. That's a low test followed by another low test. That was another buying opportunity. Okay, which is broken now. So whoever is holding this trade, which I know loads of guys holding this trade that took it here on the low test, it's fine. Hold it. Don't close it. Hold it. Stick to it. Okay. Now that's the previous level of resistance. Okay. So previous level of resistance here. That's a high test. Didn't break. That's sitting there, and then eventually pops. So it breaks through the upside and puts a new high up here, which closes above the previous swing high. And today is hanging up here, so that's actually a good thing for whoever took it, and those who didn't take it. It's also good, and I'll tell you why. Because you want higher highs and higher lows. So once it puts a new fresh high and then pulls back, then you can buy it. Okay, on a high and high low basis in an uptrend. So let it develop first. It's in phase one now, so let it go first, not just now, because let's say it pulls back now to the line, it's too close. I wouldn't buy it. It has to go first. Okay, let it go first, and new clean high. Then once it pulls back down, you can look to buy it. based on price action. Okay, so ideally it shouldn't break through this level back down again. So that's the USD Canadian. Next one. Okay, this is pound Aussie. Pound Aussie is giving a triangle and is getting squeezed in here, okay, which is usually what happens on symmetrical triangles, ascending and descending triangles. It was giving an amazing buying opportunities all the way up, buying opportunity, another buying opportunity, and another low test, and a ring low, and that's not a ring low, that's an inside bar, but this low is lower than that, so it doesn't look as clean. This was perfect, perfect, perfect. That's another low test, but up to this point it wasn't giving new highs, so it was ranging. It was like that. So we're not gonna be looking to buy that. Obviously, it is in hindsight, but we're not gonna be looking to buy that at that point in time. Okay, so we move forward. So that's the what's happening now. So it's giving indecision in the market. Okay, so and I mean whoever is trading triangles, it'd be entry stop and entry stop, and you go in the direction that it breaks. A symmetrical triangle represents indecision, and you usually break through in the direction of the trend. So the trend is up, so it should break through the upside. However, symmetrical triangles can break through either way, because it represents full indecision. Okay, on the other hand, you have ascending triangles, which is bullish, and descending triangles, which is bearish. It doesn't mean it can't break through the other way. Yes, it can, but it's highly likely to break through the upside on ascending triangles and through the downside on descending triangles. Okay, let's see what else we have. Now we have, for example, the Kiwi. Again, this is one of them that I said to wait for new lows, wait for a break of the lows. This, for example, is a descending triangle because the lows are flat and the highs are slowly getting lower. So it's a descending triangle, which represents a bearish market if it breaks through the floor. Okay, the floor is here. So if it does break through the floor, in other words, the level of support, then it becomes active. So the descending triangle activates, and then obviously it is gonna go down bearish. Okay, it'd be a breakout. Okay, whoever wants to take it there, you'll be taking a breakout from this consolidation, from this level of support, which is perfectly fine with a stop up here. If you want to be extra conservative, you can put a stop loss above the 50 EMA. If you don't like breakouts, like me for example, I don't take any breakouts, you can wait for a break, then that represents a new low, lower lows, then wait until it pulls back, which represents lower highs and lower lows, and then wait for your price action of the level, and then off it goes in the direction of the trend if it does trigger it, and that's a more of a confirmation. Okay, so it is less aggressive, it's more of a confirmation that you have there, mainly because the downtrend is kicking off. Everyone is gonna see that, and everyone's gonna start looking for the selling opportunities. Okay, so yeah, a few triangles that we covered today, and as I said, you need to wait for new lows or new highs. Okay, for example, let me show you something that you need to wait for new highs. Be something like this. You need to wait for new highs. Okay, so higher highs until it pulls back and then look to buy. Okay, same thing here, until it breaks. So a lot of things are just ranging at the top. So you need to wait until it breaks through, puts a new high or a new low on the Kiwi and all the other ones that are looking bearish, and then position yourself for buying and for selling. So this week is a bit quiet. If you have some running trades, fine. If you're looking to enter, there's not um, much to enter if you're looking for quality. Okay. Alternatively, you can take every single income wave that comes on the system, which is nothing wrong. If you've done that for the whole year, you will be up. Would have been up. I think it was 25% for the year if you have taken every single income wave that popped. So yeah, there's not right or wrong answer. It depends what you want to do, how you wanna trade your account or our account, and that's it. We can just take it from there. Okay, so I'll catch you all next week. Happy trading, and bye now.